Okay, we are back again. We had a faulty connection there. Okay, let's see. SNDL is down 0.86%. MULN down 2.5%. DPSI decision point systems up 28.7%. I lost a lot of ground. We haven't found any news concerning the stock DPSI. No news yet. IMPP. Imperial Petroleum, okay, up 2.24%. CEI up 3.82%. INDO. Indonesia Energy down 1.48%. BTTX. Beta Therapeutics up 9.57%. MREO. MREO Biopharma up 13.38%. Let's see whether any news has filtered through. None yet. So we still have several hours before the US market opens. So we just see whether we can continue to bring you the news and opinions. So in the Financial Times, they're saying that retailers are squeezed in the tight US job markets. companies are increasing wages and offering incentives to beat labor shortage. Okay, I think a retailer or an employer in Galleria Dallas, her name is Brianna Lacasse, had to hire a dozen employees in the last 30 days after she bought a women's clothing boutique in the mall of that town, Galleria Dallas, or rather okay, I think Galleria is probably a mall in Dallas. Okay, she found only six. Okay, and she's now saying we hit a bump in the road. Operations work now falls on her. Her predicament is a common one for U.S. store owners, as employment rate drops to extreme lows. No sector has struggled more than retailers to fill jobs. The sector posted 155,000 new positions in March, bringing its number of openings to 1.3 million, according to data released last week. So I know that sector, that retail sector globally, they have not. A lot of them really have to up their game. They really have to up their game. I was okay. It doesn't matter what I think at the moment, but they really have to improve what they're offering their employees. I'm not talking about payment wise. I'm talking about the sort of work they're offering there. Indeed, shelves have to be stacked. But look, you don't have. They have been doing that. Has been yes, shelves have to be stacked. But you have to be imaginative, improve the what people are doing. To attract people, to attract talent. They have to improve all of those things. They have to continue to think. They have to continue to innovate, and improve. They are competing right now, and a lot of, as you can imagine, a lot of talent actually goes through the retail industry. They come through when there are no opportunities, or rather when, especially young people, while they are waiting for what they're looking for, they are probably going to get a retail job, but some of them you can imagine have PhDs, master's degrees, and some of them are highly qualified engineers and capable, but just because they have to get something doing before they get what they want, so, but the point I'm trying to make is that the retail industry don't even realize some of these things. They don't realize that. They have to, realize who comes through their doors to look for jobs, and they have never really been doing so. As you can evidently see, they are this lady now could only get 6 employees. But I don't think well, if the industry has implemented innovative schemes and job upgrades, I'm not really talking about war. I'm not really talking about payment. Just jobs that that are will make people want to come to retail and other stuff. Or at least keep people longer. Keep people to make people say yes, I worked here, or be willing and to put such experiences on their CVs and all that stuff, or at least retain some of them, so a lot is going on in technology, so they have the opportunity to do a lot of those. People will continue to come, but this lady is has finding it a bit of a predicament to hire people that she needs. Brianna Lacasse. So her predicament is a common one for U.S. store owners, according to the Financial Times. Her predicament is a common one for U.S. store owners, As employment rate drops to extreme lows, no sector has struggled more than the retailers to fill jobs. The sector posted 155,000 new positions in March, bringing its number of openings to 1.3 million, according to data released last week. Yeah, good morning, Paul. Yet in April, retailers filled only 29,000 jobs. Friday's US payrolls report showed out of the 428,000 added in the month. Retailers' labor troubles are one factor behind rising prices at the checkout, which along with food, energy, housing and other essentials have helped push US inflation up 8.5% annually, the fastest in 40 years. So the sector enjoyed sharp sales growth in 2021 as the economy rebounded from the coronavirus pandemic, and retailers expect demand to remain elevated in 2022. Business owners, including cars, say that a tight labor market is making it difficult to keep up. Wages in retail trade rose 4.9% year on year in April. The payrolls report said, less than 5.5% jump for the average US private sector worker. Retail workers on average earn about $684 a week, compared with a private sector average of more than $1,100. Fears that a hot labor market and its accompanying higher wages will worsen the acute inflation crisis has the Federal Reserve poised to rapidly tighten monetary policy in the coming months. The concern is a potential wage price spiral in which workers demand higher pay to keep up with higher consumer prices. And according to Jay Powell, he said, we can't allow a wage price spiral to happen, and we can't allow inflation expectations to become unanchored. Okay. This is what he said last week, while noting that the dynamic had not taken hold yet. So how can individuals? I had a video I made concerning how can you as an individual anchor help to ensure that inflation is anchored. One of the many answers is don't pay the higher prices. Don't pay the higher prices. I know it's going to be really painful if you have to feed your kids, but obviously, yes, if you have to buy bread, milk, potato, the essentials, maybe shop around a bit more, and you have to buy anyway. You have to buy, but yeah, I know I'm sounding I'm not sounding that realistic, but we have to all contribute and fight the inflation. Well, of course, if we decide not to buy, then there'll be consequences. The consequence will be that there will be no incentive to sell. There'll be no incentive to manufacture, as the case may be. So the consequence will be there as well. But it may not be as bad as that. But all in all, according to him again, I says it's a good time to be a worker. Is it according to Jerome Powell? Yes, I think it's him. Yes, it's a good time to be a worker looking to either change jobs or get a wage increase in your current job. Okay, this is what he said after the central bank raised interest rates by 0.5 percentage point and signaled more such moves to come this year. According to estimates, there were roughly 1.9 job openings for every unemployed person as of March. Walmart raised hourly pay twice in 2021, bringing the average price for its 1.4 billion workers to $16.4 an hour. Target has raised wages higher in March, said it would spend $30 million to boost pay and benefits for its 409,000 employees, with starting wages at $15 an hour and $24 an hour based on locations. You can see these wage increases they are doing. It's good, but they can also use this advantage and improve these jobs. It just don't have to be just stacking shelves. You can put these people to greater use, and they will benefit and you will benefit. They will benefit, their skills will be high, it will be improved. They are now more skilled. Indeed, they're going to leave you and go elsewhere. But retail, well, especially for these big retailers, they have to. Look, now we're even seeing them as, especially Walmart, we're seeing it as a rival to Amazon. Gradually, it's becoming a bit getting more techy. So, indeed, shelves have to be stacked. I know. Paul, you are into robots and all that stuff, but robots can do everything. They have to continue to think, improve the jobs of people. They don't have to be all these just strictly stacking shelves and tidying cardboards and all that stuff. They have to improve on what they are offering their employees. This is my thinking. So employers have also embraced creative ways to draw in new employees. Okay, let's see. Home Depot announced that it would start making job offers the day after interviews. Okay, Walmart, Target, and Amazon have all introduced tuition benefits for hourly employees. Okay, that's good. Tuition benefits, good. See, these guys, I mean, they are realizing that people that come through them, they are on their way, and and you can't just say, look, we're just retailers, they're gonna go away anyway. Look, they are coming through you, grab them. So Ross Reynolds, chief executive of car wash operator Spotless Brands, offers bonuses to employees to persuade their relatives to join the company. Reynolds wants to open 5 locations by the end of the year, but not all will offer the chain's full service washes. Some will more closely resemble express car washes, where customers pull up to the gate and use an automated machine to select the service with minimal help from workers. It helps us adapt in the market where we aren't able to find people, Reynolds said. Okay. Lacaze, that's the first person we talked about in this piece we're reading. That she just recently bought a women's clothing boutique in Galleria, Dallas. I think Galleria is a mall in Dallas. If you know, drop a comment in the comment box. Lacaze cut the interview for new roles at her boutique to just 3 questions, and structured a training program that will allow her to put new employees called stylists on the sales floor in less than a week. Okay, hiring incentives have lured many employees away from their old jobs. Okay, helping to push the number of those who voluntarily quit to a record high 4.5 million in March. Stores have also become recruiting grounds for businesses in order sometimes higher paying industries. Okay, what am I reading here? Stores have also become recruiting grounds for businesses in order. Exactly, yes, we know that. Yes, that's what amongst the other things I've been saying. Have become recruiting grounds for businesses in order sometimes higher paying industries, said Mark Matthews of a vice president at National Retail Federation. Easily, clearly, yes, that's the case. If you don't have anything doing, check out Walmart or Target. They could hire you. You're an adult, you need to feed your kids or you need to feed yourself. You're not going to sit at home. This is where you start, and you probably have 2 master's degrees. For some reason you didn't get a job. You haven't gotten a job yet. Look, the talent. These guys are dealing with talent. The sort of talent that goes through them, it doesn't go through the big multinationals, big national champions. They don't go through them. You don't see this amount of talent coming through them. Yes, because not everybody will have the opportunity to go through some of these, let's say, these FAANG companies. No, they wouldn't. But the door is wider open, by far much more open to the likes of Walmart and Target for people to come through, to pick up an application to get a job. Walmart, Kohl's, all these retailers, so they have never really been thinking about trapping some of these guys, doing something about them, doing something with them, so we can clearly see now that it's it's almost as if they're just discovering now and just saying that it's also a recruiting ground for businesses. Yeah, but what I'm reading now, what I'm talking about right now is retailers and the job. Retailers are squeezed in currently in the tight US job market. I know I've talked about Ukraine and all that stuff, yes. Yeah, I know it's a war. Propaganda is going on, all right, left, right, and center. In as much as yeah, going right, left, right, and center. A lot of things can be doubtful, no doubt about that. Okay, Nasdaq up or down today? Well, I think some experts are projecting I don't know for Nasdaq, but I know the S&P. Well, if S&P is going down, then Nasdaq is likely going down, because obviously we know that the FANGs have been battered. They have been left with an ugly face, and that's a projection they're putting out there now for the S&P 3924. In fact, all the way, you won't believe it, or 3484 for the S&P. So let me even see what's going on with the This is S&P futures right now. It's down at you can see that 4049. So it hasn't done well so far. I'm busy cashing in some tiny gains there. So well, indeed, it could also yeah, indeed it could also spike as well. But you can see the projection now 40. We haven't even reached. I don't think we have reached there. I'll have a look now and see. Let's see what the S&P is saying. So let's look at the chart. Since this year, has it fallen? This year, has it ever closed? What's the lowest it has closed? This is, I mean, obviously this is a daily chart, so it doesn't give the intraday figures. Okay, I can always pick up and look at the intraday last 10 trading sessions. Let's see. Oh well, yeah. The other guy chatting above there, pause. Let me we have somebody who you can actually help out with. I think the other guy in this chart, that's Paul. Okay, thanks Gabe. And yeah, Paul has been cashing in money, sometimes 1,200 a day on, I think, also Tesla as well. So you came to the right channel. So yeah, I think what he does is strangles. Strangles. You really have what you have put options. Okay. Yes, I think it's a good decision at the moment because things, it's quite bearish for Tesla. So amongst other things, systemic issues, and also the fact that market participants are not sure what how much of a distraction Twitter is going to be for Elon Musk. So I'm sure you may have started to rake in some. Yeah, okay. You've started to see some gains in your position. So I think Paul, he's just, you can see he's saying this, he's watching Tesla at 843. I think Paul, correct me if I'm wrong. He does strangles. That is, you buy calls and buys puts, but not at the same strike prices. So but he knows, what he knows. He's evidently it's all about who's been making money out of it. So Paul has been making money out of it. So he he'll be chatting now. No, not strangles. Okay, I just scalping in and out. Okay, so how did I come about strangles here? Okay, okay, yeah. Oh no doubt. Yes, Apple. I mean, especially Apple. Yes, a very good barometer. Yes. So, what sort of yeah, and he is already already has a position already. He or she has a position already. I know the problem with options is that they decay as well, especially when they are getting closer to expiration. Yeah, that's some tidy gain for scalping. Yes, for even some of these big traders as well. If they get 1,000 in a week, they are really grateful. Okay, so this is let's see, this is the last 10 trading sessions for S&P, and this is the 10-minute chart. That's the 10-minute. That's, you can't get it any lower based on what we have here. And has it ever fallen up to that sort of level 4090? Yes, okay, it has. So even lower. It has on Friday it's dropped to 4072. So still trading within the range it has established so far this year intraday. So yeah, at the same time, it could also spike as well. It has potential to. You can see this is just. You can see this is only within. This is also on the 4th. This is Wednesday, 4,300. So indeed, today could be a huge one for Nasdaq as well. Anything could happen today. Anything could happen, because we are approaching correction on these two indexes. So I mean, we have been here for for weeks now. People are really a lot of people are sitting on cash. Some of these big houses, investment houses, they are like what they're saying now. Some of them are saying 70% cash, 30% securities. So it could be anything. It could be a huge rally. But this week as well, maybe, even though it's a Wednesday, so not today, but expectation of if people begin to expect that CPI will be better than what it was last year, it could even begin to rally today. You never know. Yeah, consistency, yes, very, 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 very important. But if you're fortunate, because there are a lot of moving parts in this whole business, and you have to continue to strategize. Stick with what works for you, and also be realistic and open your mind and see what's going on, and no, I mean, like Paul has been doing, he has totally, I can tell you what his strategy was last month is not what it was anymore now. I'm telling you. you know. Yeah, you can imagine. That's like crazy scalping. Crazy, like 5 minutes. If it doesn't work, right away, out. Or in the case of if you're not going to go, if you can't come out really fast like I'm doing here, even though it costs us, there's a cost to it. This is a platform for trading. If you're in US, for instance, they may not allow you to open it, but it's more of a strangle. Open. If you place this, you're bearish. If you buy this, you're bullish. So either way, it's making money, but it's I'm not saying you can see sometimes it's in the money and then you cash out, but it's very, very tricky. If you close the one that is doing well, your losses may continue to, I mean, especially when the market is volatile and all that stuff. So but if it's something one can manage well and just know the right time to come out, and whatever it is, you have to do. So yeah, you just see it, and you can also do that with options. That's in your case. That's pretty much like a strangle. I think maybe options may offer better prices when you're doing a strangle. Better opportunities because they have various prices as against what I was just showing you now, which is fixed. It's just that maybe when you open it, maybe the index or the price of the security is at a different point. Or you'll buy when after the opening crashes. Okay, fingers crossed. Let's see how it's going. Right now I didn't even check what the futures is saying. It's at it's crashing 40-30. I think we have never seen this. I think in the last 30 days we haven't seen 40-30. I'm just looking at it right now. This is the 10. Okay, let me get closer to 5 days and see whether we have reached 40-30 before 5 days. This is let's see, 40.65. This is the lowest in the last 5 trading sessions. Obviously in the last 10 trading sessions we also haven't seen 40-30. Some are projecting 39.24 to see the list. I mean, the projections even go deeper to 34.84 on the S&P. Let's look at 3 days. But at the same time, it could also rebound majorly as well. So let's look at the last 3 trading sessions. This is a 3-minute interval. No, we haven't seen that 40-30 as well. Okay, let's see what the last Friday's session. This is S&P cash, not the futures. The lowest. This is a 1-minute interval. 40-70 as well. So maybe this is we're looking at the lows of this year so far. I think we can actually get the futures on this on Charles Schwab here, S&P futures. Yes, we can. Futures, that's it here. Yeah, a lot of people, that's exactly what we're saying. A lot of people have cash right now. If a crash happens, the reverse could be way back up to, on the S&P, like 4,400 today, and then maybe afterwards it will come back again to where it is today. So that's what everybody wants, volatility. You know, that's why they're sitting on cash. They are ready to. There's money to be made. You know, there's no. I mean, things are going wrong, yes, but look, there's money to be made. You can't cry about that. Okay, let's look at market overview here. Let's see equities, E-mini S&P futures. You can see 40.41. Might take some time to come up. Market is opening in about 2 hours. It's going to take some time. Okay, yes, we have it 40.31 now. 40.31. What is it saying here? 40.30. The same thing as well. 40.39. And this has bars. So Gabe, what's your plan then? Do you want to hold on and given what's going on here, given the implosion we are looking at right now, it looks like maybe your options could add some more value as well. As a matter of fact, this is not even the lowest it has reached in this session alone. It has actually reached 40.34. It reached there twice. Something at those levels reached 40.34 just 5:52 a.m. Something's going on. we haven't really bothered to look at the current news. We may not see anything as such yet. Yeah, very volatile, yes. Bitcoin drops below 33,000 to hit its lowest since January after stock sell-off. Interest rates are surging. Here's how to protect your money. Uber tells staff company will cut down on costs, treats hiring as a privilege. Kevin O'Leary says there are plenty of good places to hide as interest rates rise. Obviously, yes. Another one is energy stocks as well. Energy stocks, energy is they are not going away. They are not going away. They have cooled off a late, but I saw somewhere as well. Even though it really doesn't matter a whole lot as such, they say that this guy's investing in oil as well, in crude stocks or something like that. This Berkshire Hathaway. So you can see all of these. I think these two are energy stocks, EOG and NRG. They're up 9.7%, 7.13%. Obviously, here we watch CEI, and it may not be doing well, down 1.51. IMPP up 2.24. INDO, VR, Vertex Energy, VTNR, and indeed any other stock. I mean, I think also Paul, you traded some Chevron or something like that. Okay, let's see what S&P futures is doing. 4034 going lower, so has actually gone lower than 4032 just a few minutes ago. But pulling back again. Okay, let me close this position and open another one. $40.33 got some resistance and is trying to fall further again. Some implosion going on. Capitulation is going on. Buyers are giving up for now. Yeah, I mean, there's a good chance that might be the case with the SEC, because concerning the retail folks, and that's the war between retail traders and the hedge funds. Yeah, there's a good chance, obviously, the retail folks can't influence the SEC. They don't even know. But I mean, these hedge funds have the access. They know the corridors. I mean, you can imagine who would you want to listen to? You know, the hedge funds or the retail mean folk. You know, so yeah, that's, you know, if we have to allow the conspiracy theory to be reviewed, yes, there's a good chance that might be the case. Yeah. I mean, personally, from my experience in dealing with the SEC, you know, um, the sort of treatment you can get may not be the sort of treatments that the huge hedge funds, the more established ones, may get, and especially when when you're dealing with them, not, I mean, and you're not going through the regular, or rather, you're not going, if you're not approaching the SEC through, or rather, if the SEC is not seeing what you're doing, your complaints or anything like that, through the light or through the aid of another establishment, then, you know, they might, you know, there's a good chance they may prefer not to really, you know, give your case a lot of credence. I mean, this is not, this is my theory, this is my opinion, not, I'm not, I don't have any evidence in that regard, but based on my own experience, which is that there was a disclosure I, you know, put out for my company, and I got a response from the SEC, which I probably feel, what was written in that response, they may not write it to a hedge fund, that sort of response, you know. So that's a few lines in that response. They may not write it to a hedge fund if the hedge fund presented such a disclosure. Yeah. That's just, you know, in simple terms, just based on that alone, that's the premise of what I've been trying to say now. You know, yes, if you don't, I mean, my own disclosure didn't come through a third party, so, you know, I was, you know, I'm trying to say maybe because it didn't come through a third party, then, you know, I got the sort of response I got. So in that light, if retail investors are complaining and protesting, you know, they are likely to be doing so over, like you said, the Reddit and YouTube, you know, and then the SEC will definitely, you know, there's a good chance, I won't say definitely, but there's a good chance that will, you know, they may disregard them, or, you know, that sort of thing. You know, they may, I know there are channels where some grievances can be protested, can be disseminated to them, you know, but just like I said, based on my own experience with SEC, you know, yeah, they prefer to, this is not the conclusion, it's just my own opinion, they prefer to communicate with the experts. They prefer to communicate with the experts, you know. So yeah. Yes, no doubt. Yes, and indeed, the retail traders are also manipulating them as well. Yeah. Okay, Josie Wells. I don't have any position in Bitcoin. No. Okay, and I've not even the chart is not easy to come by. If not, I would just have a look. Oh yes, exactly. Oh yes, I mentioned yes that you had Exxon and OXY. What is it? OXY again? Exxon and Occidental. Yes. I remember you mentioned that. Yes. Today, okay. Let's have a look at oil. But it doesn't. The oil may be dropping, but it may not mean that. So oil at well. Let's see what oil is doing. Connection successful. Okay. WTI, let's see. E-mini crude oil, QM, let's see. Nothing going on here, it seems. Guys, we need more likes, if you can. Okay, you have September expiration on XOM and OXY. Okay, this is as usual. It takes time to come up. Let's see. I might be able to see what oil is doing here. This is let me see where we can find crude. No. Yes, U.S. crude, Brent crude as well. Okay. U.S. crude is at 105.78. Brent is at 108.97. Some are saying they might get to 1.115 this week. Okay, so S&P futures got as low as 40.32, I think. 40.32. So this is Brent crude, is it? Crude oil, WTI crude, 107. This is the US crude, WTI, is it? Yeah. $107.003. The Oklahoma one, that's the one. 107.06. Well, actually, as a matter of fact, in this session, it has been dropping. So, oh, it opened another window. Yeah, crude is still it's one energy stocks, they're still viable at the moment. I heard as well that the natural gas, that's the US one, not the one in Europe, the one in US it's up by it's up to now at $9 per 1 million BTU or something like that. Yeah. Everything is on the move. Prices. And they're saying some people are criticizing Jerome Powell that he's saying that inflation is peaking, but maybe not. It's according to them, they're saying maybe it's not, hasn't peaked yet. It's still going to continue to rise. Okay. It's PLTR. Okay, let's see. Down 12.11. It's crashing. Did you notice that? Down 12 point roughly 12% now, but even though it's trying to claw back, something must have happened. Let's see. Some news there. Post lower Q1 adjusted earnings as revenue rises. Issues Q2 revenue outlook. Misses by 0.2. Reports revenue in line with Q2 revenue blows consensus. Post lower Q1 adjusted earnings as revenue rises. Okay, maybe they may come back and trade the revenue gain. Yeah, so it seems they found something bad about its earnings, because I can't see anything else behind this drop of 11.71%. But some are already buying back, some have bought back. Dropped all the way down to $8, now at 8.37. There's also some broader news here. It says social buzz. The most mentioned stocks on the Reddit sub forum, Wall Street Bets, were largely down hours before the opening. Okay. Palantir downs. Okay, hasn't dropped further. It was at some point down 6.3% on Friday. Okay, that was Friday, not today, but it has dropped more. revenue for the quarter, that is as it concerns Palantir. Revenue for the quarter ended March 31st was $446.4 million, up $341.2 million. Analysts surveyed by the Capital IQ expected $443.5 million. Okay, so not world's bad, but they may come back when the sellers have gone away. Some people might say, oh, well, it's still tidy enough, I might just buy something. For Q2, the company expects a base of $470 million in revenue compared with analysts' expectations of $483.8 million. Palantir continues to expect annual revenue growth of 30% or more through 2025. Yeah, you said you want to like it, but they are not. There could be some opportunity there. Let me have a look at the daily chart and see what the trend is. Visual trend for the stock is. It's bearish, no doubt about that. Yeah, there is definitely. Oh, you know very well. There's an opportunity there. Bearish, trading below all of its moving averages. Momentum as of Friday, poor. RSI indicating sellers are in charge. Let me even have a look and see what the short-term bearish. Okay, you think it won't get any cheaper? Yes, it has dropped. It's been dropping. As of November, it was at 22.83. On Wednesday, it was at. On Tuesday, it was at 10.55. $2.51 million shares have crossed the tape. This is the May 13th call series. These ones will expire on Friday. The one with the biggest open interest is a $10 strike. No, actually the $11 strike. September expiration for. Okay, let's look at that. Yeah, people are also doing the same, just as you. They're looking at what you're looking as well. You can see 14,000 on the $14 calls. They are quite cheap as well, like indicated. 0.58, $58 gets you one contract. That's cheap. September. Can you imagine? That is cheap. $15 strike also has open interest of 13,019 and 197, and there's also $17 strike. Wow. Relatively cheap, yes, but obviously, yes, the ones in the money are not that cheap. Not that cheap, obviously, they're out of the money, so yes, they will be. Oh, on the money, okay. On the money, on the money. The $7 calls is has a spread that is fair, I think. A spread of 0.1. But obviously, I mean, okay, yes, you're looking at. So you're gonna buy the step on client Palantir, or you're just watching it. Okay, we have something here on the Financial Times is saying the week ahead, U.S. consumer price inflation shows signs of slowing, but some people don't agree. Some people say no, it's not. It's not slowing. It may not slow. And they asked, has U.S. consumer price growth? Obviously, we know on the 11th, that's Wednesday the 11th, the CPI is going to be announced. And some are saying if it's just as it was last year, then that's not good news. So they asked, the Financial Times is asking, has a U.S. consumer price growth finally started to moderate? And the answer that was given is that the forthcoming U.S. consumer price index report is expected to show that inflation continued to rise in April, albeit at a slightly slower pace than in previous months. Economists polled by Bloomberg forecast that consumer prices increased at a pace of 8.1% year on year, compared with 8.5% in March. Inflation at that level would remain close to 4-decade highs, but would represent the first slowdown since August 2021. Okay. Core CPI, which strips out the effects of the volatile food and energy sectors, is also expected to have slowed compared with April last year. But the data due out on Wednesday, yes, might still show that core inflation accelerated from the previous month. The category to watch will be accommodation costs, according to Greg McBride, chief financial analyst at Bankrate. Shelter accounts for 40% of the CPI, as it does for many household budgets, and with double-digit increases in rents kicking in, this puts the household budget in a vice, even if food and energy costs level out. He said, yes. Accommodation, no doubt, we all know very well, is a major elephant a major elephant. It is an elephant in one's pocket, in one's bank account. It's just they are just foraging and consuming everything. Yeah, this is one of two consumer price reports that will be considered by the Federal Reserve at its June meeting, during which it is widely expected to raise interest rates again by 0.5%. 0.5 percentage points. A big deviation from the CPI forecast in either direction could change the Fed's calculus. This is according to Kate Dogguide. And they asked another question: how much did the UK's GDP grow in the first quarter? Okay, it says the Bank of England expects the economy to grow by 0.9% in the first quarter, boosted by the easing of all COVID-19 restrictions earlier in the year. The economist polled by Reuters forecasts GDP to have expanded 1% in the quarter when data is released on the 12th. But they also project output to have grown 0.1% between February and March. The reading will confirm the slowdown seen in February, when growth dropped to just 0.1% from 0.8% in January. Okay, and they're asking another question: who will fill the wheat market gap left by Ukraine? Okay, so the answer is a response, or what looks like it is that agricultural commodity markets have been rocked by the war in Ukraine, as buyers of grains and vegetable oils from the country as well as Russia try to find alternative sellers. The jump in food import bills for poorer countries has led to worsening hunger, as well as worries about political instability. Russia is the largest wheat exporter, while Ukraine is the fifth largest. Together they account for 30% global exports, according to United Nations Food and Agricultural Organization. The two countries also account for more than 60% of the sunflower oil trade. And according to Craig Thorne, senior commodities broker at StoneX, his biggest concern right now for the agricultural market is wheat. India has had a bumper crop in 2021, has been cashing in on the surge in the wheat price. This year's harvest was initially forecast to be a record, but the extreme heat wave hitting India could lead to crop damage and trigger export restrictions. The world needs exportable supplies of wheat, and things could get very tight this summer, said Turner. The US Department of Agriculture publishes its crop publication report on Thursday, the 12th of May, along with its monthly World Agricultural Supply and Demand Estimates report, covering grains, oilseeds, and other agricultural commodities. The production report will include estimates of this year's US winter wheat harvest, while the WASDE will offer some insights into which producing countries will fill the gap in the export markets. Yeah. 87 minutes, yes, we're counting down. Palantir is still has lost some more. Oh yes, it has actually lost more, yes, for this session, down now to 7 points, below $8 now. Okay, we are counting down to the open. Still hours away. Palantir has continued to lose 16.14% now. Let's see, MULN down 5%, CEI down 1.37%. Imperial Petroleum down, or sorry, up 0.53%. Indonesia up 4.61%. Okay, let's see. We can easily see what's going on with the S&P futures up 4. Now has rebounded again. Now at 40.4062. Yes, let's see what's going on in the pre-markets. Benzinga. Micro sectors, oil and gas. Export and production up 11.8%. That's an ETF. This is 3 times in VAS. Okay. So the biggest I think that one's DPSI. Or the others are possibly because of reverse splits. DPSI up 53.51%, cooling off from the highs of this session of 12.16%. Let's see whether the news has filtered through. No news yet. Only 183,000 shares so far. There must be something. Is it being pumped? TPSI. Yeah, fingers crossed. They know. I mean, they. I mean, you must have heard that Apple is the bank account of America, so it should be. If the beat up you mean is a positive, is like to beat it, like to go up. Yeah. We hope there's a good chance that that should be the case, because yeah, obviously a lot of money is in that stock. A lot of people have a stake or two in Apple. Yes, so if it does well today, that's really good. That would be really good. decision point. Let's see if there's any news. Okay, yes. Okay, it's uplisted to New York Stock Exchange on Thursday, the 5th of May. S&P futures now at 40.57. Momentum is rebounding from being oversold. So let's see what's going on with energy. Okay, let's see the futures again. It's a touch, I think, to look at that. Getting costs at the pumps. Yeah, rocketing costs at the pump bolster refiner profits. This is according to the Financial Times. They're saying US oil refiners are enjoying a surge in profits as inventories of critical fuels are drained across the US, sending prices sharply higher just weeks before the start of annual driving season. So yes, Paul, you know what you're doing there. It says here, the sharp rise in the cost of fuel at the pump in recent months has prompted a backlash against Joe Biden's administration, which has warned oil companies against profiteering amid war in Ukraine and spiraling inflation. Some in Washington have advocated a windfall tax on the industry. Worsening shortfalls of diesel, petrol, and jet fuel across the country point to a refining system stretched to its limits by a robust post-pandemic recovery in demand, the loss of Russian supplies after its invasion of Ukraine, and refineries are running at full tilt. The tight supplies are likely to mean months of high prices for consumers and big profits for refiners, according to executives and analysts. So right now, according to David Lamb, chief executive of Texas-based CVR Energy, a refiner, let's see whether that company is a public company. CVR Energy. Let's see. CVR Energy. Yeah, it is a public company. Yes, we got it here. CVI. It is down 2.48%. So it's saying the man is saying that right now our markets looks wonderful. Yes, the chairman of the CEO of this company is saying the market looks wonderful. Okay, so Martin Ratz, analyst at Morgan Stanley, said the system is behaving as though refining capacity has effectively run out. This is not easy to solve quickly, especially if demand recovers further. Margins have not just risen, but surged to unprecedented levels, plummeting stockpiles of diesel, which fuels the nation's construction. Heavy industry, rail and haulage are at the center of the supply struggle. Diesel inventories are at their lowest since 2006, and prices at the pump are close to $5.5 a gallon. A record according to the Energy EIA. Okay, national petrol prices are around $4.3 a gallon, just off recent highs. As long as inventories remain low, you would expect that to translate into a very strong refining margin environment. According to Joseph Groda, chief executive of refiner Valero. Okay, let's look at Valero here. Okay, we'll look at OTM. Exxon. Let's look at this stock as well, Valeria. We're just reading what their CEO is saying. Let's see. Valero. Yeah, VLO. So the stock is down today, down 1.83%. So their CEO is saying, what did he say? He just said, as long as inventories remain low, you would expect that to translate into a very strong refining margin environment. Okay. So Karim Fawaz, a director at S&P Commodities Insight, said that there was little sign of fuel markets loosening, especially as increased travel was expected to buoy demand over the summer. Okay, it says there's little sign of fuel markets loosening. Okay, so you are running a historically low inventory. You are running at historically low inventories with basically very limited spare refining capacity, and you're staring down potentially Europe phasing out another tranche of Russian diesel imports. It's difficult to see how the system bounces back. The prospects of a fresh rise in fuel prices hitting consumers already suffering from a 40-year high inflation rate could inflame the popular backlash against oil companies. Darren Woods, CEO of oil super major Exxon. So we're now on Exxon. So after that, we'll just have a read about what their CEO is saying. Okay, down. Why does maybe crude is down or something like that. It's down 1.75%. Okay, September. Well, September on the money. Okay, you have money then. I mean, still 20.3. Okay, let's see the lowest of the on the money is the 92.50. This is the $90 one. Okay, so, okay, it has, so these are, okay, they were on the money, so okay, maybe for you it is, they are quite affordable. Yeah, spreads, see that one, even though maybe not many people buy that. You can see that almost 25, 0.2 0.25 spread on that one. This one on the 775 strike, the spread is 25 as well, 0.25. Here the spread is huge, 0.3, better, worse than the ones above. These $90 calls for this series, and they're also looking at it as well. You can see the open interest is at 1,868, but also they are also looking at the $100 strike. See the open interest is 1,875. The spread is good for this one. It's out of the money. But at the same time as well, I think also the fact that we also know that energy stocks are, you know, in play, they're still viable at the moment. Maybe a lot of money may have gone into them, a lot, and maybe they may not be, or rather they get a lot of trading in a, I mean, I've not looked at them a lot of late, so during the session or anything like that, but they're still viable, because we can even easily see that the chart has to be a bullish one. It just has to be, without any doubt. This is Exxon. I mean, even in, yeah, it's strongly bullish, easily strongly bullish. The last time it ever fell, it was ever below its 50-day moving average, was in December. Since that time, on the move, and only twice has it fallen below its 20-day moving average. That was sometime in March, and then sometime again late April as well. So there was an opportunity. There have been opportunities. So then things are moving up, just down slightly, 1.84%. Exxon. Yeah, oil for sure, yes. But do you see the connection between maybe lithium and EV stocks? You see the connection between them, and this is my theory, between them and energy. First of all, there's on the investments. These guys, they measure the super major and the small energy companies, especially the small and medium ones. They can't get any financing to do any project, any investment to pursue projects in maybe drilling more wells, or lifting out what has been drilled or anything like that. So it's, amongst other things, causing the squeeze we're seeing in energy, because before this war came out in Europe, the energy was in play because of the underinvestment. So, and because of this on the investment, this is my theory. Because of this, and also that some people have also explained that theory as well. But I'm adding lithium or mining plays that are involved in trying to facilitate the green drive. So if you see the fact that there's the investment in energy, and we all need energy. We all need, fossil fuels. We need them. We haven't gotten to our green utopia yet. We're not there yet. So we need green. We need fossil energy. So because of this on the investment, it also people are forced to look elsewhere. We're looking to alternatives as well, but we can't find anything there. And also because we're looking there as well, we're also forcing the prices there. We're forcing the demand there. I mean, everything's growing. So the underinvestment in fossils is forcing people to look into alternatives, and then hand in hand they are moving up. Hand in hand, they're moving up. We should rather, as you were, you would expect that maybe the fossil side should be depreciating, but the two of them are going up. And the reality is that the alternatives need fossils, even though they will never say that. They will never say that, So I think the people who are realistic in the alternative side are, especially the investors, they're behind the scenes, rubbing their hands in glee that look, this is good, because it's playing into their hands. The investments are doing well, because we're not going to find with the way things are going now, if you ever thought that ICE cars wouldn't go away, with what's going on now, then it's a validation of that assertion. Exactly, yes. Because even though on the other hand as well, if there's profit to be made from oil, it plays into the green side as well, the green transition as well. They go. I think they go hand in hand at the moment. They go hand in hand, even though they are supposed to be divergent. But right now, they're going hand in hand. Because the profits right now we're seeing in oil in crude is because of on the investment scarcity now. On the investment and shortage of supply. So as such, it's now causing us to look elsewhere, and also driving that elsewhere side, or that alternative, or the green side up as well. So Darren Woods, CEO of US oil super major Exxon, which has a large refining business, They actually sold one of their refineries to Vertex Energy, VTNR. So they sold one of their Alabama. No, not Mobile. It's Shell. Sorry, Shell sold one of their refineries to this company. So not Mobile. So not Exxon. So which has a large refining business. Said he did not think very high margin environment was sustainable or good for economies around the world, even with high prices likely to stick around. Few expect consumers to cut back. People have been unable to travel for a couple of years. People who have been unable to travel for a couple of years are ready to take a vacation. Okay. Yeah. Yes, there's definitely money to be made. Yes. Yes, the problem with the drive to go alternative is that it's not realistic enough. It is not pragmatic enough, and the people who are pushing it are not, as it were, they would say they are not doing business, and they're not doing business, they're not. It's largely pursued by people who are not in the industry, people who are not providing energy themselves. They are the ones who are the top of the chain, trying to get us to go alternative. We all want to get it or go alternative because, look, man, those fumes are not delightful. They are not good at all. But we have to be realistic. We have to be realistic. That's a problem. There's just that not balancing it sufficiently. That's the problem. It's obvious. I mean, obviously, very political. So, politics is not enough to bring food. It's not bread and butter enough. In this case, it's not bread and butter enough. So, the reality on the ground is such that fossil fuels are still going to be needed. They're still going to be needed in everything. Exactly, too politicized. Yes. The green drive is really good because there's money to be made there, man. But it's, if you look there and see what's going on there, you just don't want to get involved. Oh yes, exactly. And if you didn't know before, you probably think, oh, these guys, they know that they are. I mean, until you see the sort of things that have been going on elsewhere, associated with the bigger drive, then you understand, that this is just a dogma that they are pushing through, and this is, not the bread and butter stuff. It's not sufficiently grounded. That's the problem. That's why we're having this whole problem. If not, sufficient headway would have been made. I mean, if there is really any headway that can actually be made, I mean, if there is really any headway that can be made, yes. But like I said earlier on, yeah, it's possible. As humans, it's really possible that we can develop systems that can use less fossil fuels. I mean, maybe far less than what we are using right now to maybe possibly supply energy demands, or maybe things like that. But at the same time, we have wealth, as it were, has been created, using using tangible. I mean, it's the wealth we have today is against tangible stuff. So yes, in that light, there is an opportunity for green technologies. But something is missing somewhere. Something is missing somewhere. So if only more and more pragmatic people will continue to take charge of this alternative drive to energy, take it by stranglehold, and push the politicians aside. Let them be seen less in this green drive. Then maybe we might begin to get. I don't think that will be a solution as such, but we'll begin to become much more pragmatic about our opposite of it all. But as it is right now, the biggest champions are not facing what's on ground. Yeah, see, that's the point. Yes, it's that's that division. Yeah, some people, the attitude, of some people, towards work and all that stuff, and yeah, amongst other things. So I mean, when you bring all of these things together, when you hear all those when you marry that with the push to go green and all that stuff, then you wouldn't see anything other than what you just pointed out. So okay, so let's look at MULN. 4.58%. Down 4.58%. CEI down 1.91%. SNDL down 2.6%. DPSI decision point systems of 62.78. We haven't found any news yet concerning 233,231. US stock futures were down sharply as investors are concerned about the rising inflation will lead the Federal Reserve to aggressively raise interest rates. The Bureau of Labor Statistics April Consumer Price Index will be released on Wednesday. Oil prices have also fallen, with front month global benchmark crude down 2.1% and WTI crude down 2.2%. So we're counting down. We have about 45 minutes before the market opens. Okay, so B futures rebounding 4060. They're buying the dip. Dow futures drops more than 400 points as market sell-off continues with yields on the rise. Rivian stock plummets as Ford plans to offload 8 million shares of EV startup. Oh my goodness. 5 things again. Rivian, let's see, Rivian. RIVN. Rivian Automotive down 17.3%. Ford to sell 8.8 million shares of Rivian as a post-IP lockup period expires on Sunday. Okay, that was yesterday. CNBC reports. Ford holds 102 million Rivian shares, nearly 11.4% of the company, making it fourth largest holder of the company as of December 12th. Ford will be selling shares through Goldman Sachs. Both blocks of shares are priced at $26.9, which is 6.5%, which is a 6% decline to the stock's Friday closing price. JP Morgan Chase also plans to sell a Rivian share block of between 13 million and 15 million for an unknown seller. Okay, the shares are trading at their post-IPO low, down about 4% since the peak. Oh my goodness, on November 18th. Wow. When disaster strikes. Let's see daily chart for Rivian. Bearish all the way since since forever, like since since last year it's been bearish. Momentum is totally sold out on this daily chart. Okay, thank you, Paul and Gabe and every other person who joined this live session. And that's Paul, Gabe, and let's get the other name. Well, thank you everybody for joining this live session, and I will definitely come back. Paul, yes. Paul, Gabe, and Josie Wells, and thank you all very much for joining this live session. Okay, so